There's a trend of rising and falling, reading the price language. This signal to buy and sell and bid farewell to filling the deal. Today, we're going to learn about the bearish candlestick patterns. The appearance of an evening star indicates that the bull trend has come to an end and adjustment is coming. Let's start with evening star. So what is an evening star? As shown in this right line. The evening star is a bearish candlestick pattern which consists of 3 candles. A large white candlestick, a small-bodied candle, and a red candle. An evening star demonstrates a unique characteristics. The closing price of the last candle must be lower than the first candle for at least 50%. We can even determine the bearish level of the market by looking at the closing price of the last candle. As you can see in this chart, the red candle's closing price has just exceeded the 50% level. This indicates that the bearish trend is comparatively weak. If the red candle's closing price is close to or the same as the white candle's opening price, it means that the bearish trend is comparatively strong. The red candle's closing price is lower than the white candle's opening price. It means the bearish trend is very strong. In everyday trading markets, an evening star may not be so obvious as you can recognize from the textbooks. Here are some instances we found in the past. In the first figure, you can see this middle section is formed by 2 small candlesticks. Let's move them back to a real-life trading chart. After a strong price surge, an evening star is seen at this high level. Then we immediately see a price correction patterns. The second figure is taken from OKEx, a 2-hour BTC USD chart. This may not be a perfect example, as the middle candle is not significantly small. However, we can still see an evening star pattern and the price falls immediately after the pattern is formed. In the third figure, 2 small bodies candles formed the middle section. We can also see that the red candle's closing price is lower than the white candle's opening price. The price symbols after continuous oscillations. Sometimes the evening star may appear multiple times in a short time. In this BTC USDT bearish trend, we see 2 evening stars when the price rallies back up and falls immediately after. The second one we will learn about is bearish engulfing. A bearish engulfing pattern consists of a white candlestick followed by a large red candlestick that engulfs the small white candle. But how can we determine the bearish level if we see such pattern? In the first figure, the red candle barely engulfs the white candle, meaning the bearish trend is weak, and in the second figure, the red candle's closing price is significantly lower than the white candle's opening price. The length of the red candle is almost twice of the white candle, meaning that the bearish trend is strong. And in the third one, the red candle engulfs multiple white candles at a time, indicating that the bearish trend is such strong. Now, let's look at some real-life examples. As shown in this chart, the first figure is a LTC USDT day chart from OKEx. After a price surge, we can see a large red candle engulfing many white candles, and a strong bearish trend follows. The second one is an ETH USDT 2-hour chart. After the ETH price rallies back up to a new high, a bearish engulfing pattern is seen, and the bearish trend continues. The third figure is an EOS USDT 6-hour chart from OKEx. After a continuous price surge, a bearish engulfing pattern is formed as well, and a strong bearish trend appears. Okay, the last one we're going to learn about is the tower top. The tower top pattern is comprised of a normal or large white candles at the left. several small candles, usually more than 5 in the middle, and a normal or large red candle at the right. As you can see, it looks exactly like a tower top in the chart. A tower top often forms after the closing price of the last right candle is lower than the body of the first white candle by 50%. A tower top is a reversal pattern. It indicates a reversal of the bearish trend. This reflects a gradual exhaustion of buyer before the seller forcefully regain control. We can also determine the bearish level of the market by looking at the closing price of the last right candle. As shown in this figure, if the right candle's closing price barely exceeded the 50% level, the bearish trend will be comparatively weak. But if the closing price is closer to the white candle's opening price, the bearish trend will be a little bit stronger. And if the closing price is lower than the white candle's opening price extremely, the bearish trend will be very strong. Let's take a look at some real-life examples. This figure is taken from BTC USDT 6-hour chart at OKEx. We can see long shadow attached to small candlesticks. But this phenomenon doesn't affect the tower top structure, and the BTC market sees a strong bearish pattern afterwards, and the price falls to a new low. The second figure shows the spot ACC USDT 12-hour chart at OKEx. The middle section of the tower top is not formed by unusually small candles, and we can see a larger fluctuation level. After the pattern is formed, ACC price tumbles sharply. Let's have a review of what we learned today. The first one is an evening star, meaning the darkness is coming upon us. The second is bearish engulfing, indicating a bear run coming. The last one is a tower top, reflecting the gradual exhaustion of buyer. So here comes the end of our section. We will show you the importance of the various candlestick line combinations position afterwards. Thanks for listening.